Elena, may I start with this issue of defaults? Because in the past, obviously, defaults have had a very significant and long-lasting impact on the economies that have suffered them. How high is the risk, do you think, of a Russian default right now?
Well, I still think that the risk of Russian default is high. And at the moment, it's not about the ability to pay, but it's rather the willingness to pay. You saw the payment indeed went through, but we will also have further coupon payments in the coming months, which do not always have the optionality of paying in the rubles. And it's also not clear from the legal standpoint whether they'll be able to use their frozen reserves to be able to repay those. And from the statements from the Ministry of Finance, Central Bank, it's clear that they do want to be able to use those frozen assets to repay foreign investors.
Talk us through the complications of a default, Elena, eventually, if it does indeed occur come April, May, whenever it may be. What are the complications of a default for the international investment community, as well as for the Russian economy?
Well, for the international investment community, the fact that Russia has pursued the so-called Fortress Russia strategy meant that they are more insulated, but also more isolated. So total holdings before this war of foreign investors in Russian government debt is about $65 billion. For the global investment community, it can be painful, but it's not catastrophic by any means. Of course, it's also very clear that Russia isn't started the war with Ukraine. So contagion of the classical kind of the balance of payments sort of crisis contagion is not present here, and therefore is unlikely to have massive spillovers on the global emerging markets. What it means for Russia, it's another brick in the wall. You know, they're going towards complete isolation. They're going towards economic autarky. They're talking about seizing assets of foreign companies that are leaving Russia. They were forced to implement capital controls. So it's all part of the same narrative of further isolation. And as President Putin said, the USSR used to be under sanctions and achieved great success. So I guess that's the success they're aiming for at the moment.
What is the stability of the Russian economy right now? What do you think it's going to look like in 6 months? The central bank has raised interest rates to 20%. We still don't yet understand the full implications of where the sanctions are going to be felt the most. What do you think we look like in 6 months' time, a year's time, if these sanctions remain in place? And what are the parallels do you think we can learn from countries like Iran?
Well, I think we are looking at the sort of minus 15% contraction in the economy. It's, of course, still very uncertain, but we will have a dramatic reduction in domestic demand, and also we'll have shortages. Of course, in the very near term, we saw people rushing to the stores trying to get goods that they believe will be in short supply. Russia has been importing a big chunk of what they consume. So it will be very hard for them to come up with import substitution. And even if they try, a lot of parts are still imported. Of course, for food, there is a chance. So for the medium term, it's probably going back towards USSR. You brought up the example of Iran. I think that's a very relevant example. But already in terms of the number of sanctions, Russia has surpassed Iran and North Korea almost put together. So it's a much more severe situation. So I think we need to start looking at the USSR example. Was the big difference that in the 90s crisis, there was high uncertainty, but there was hope of reintegration with the global economy. Now we have high uncertainty, dramatic contraction, but direction of travel is disintermediation, moving away from the global economy and for further isolation.
Elena, could we pivot quickly to central bank policy? Because, clearly the rate now at 20% is intended to stop some form of run on banks, presumably, sort of contain the risk of the banking system creating greater downside for the economy. Are you seeing a run on banks continue? Are you seeing consumers generally still struggling to get the money out of the banking system, or is 20% enough?
Well, 20% was matched also with severe capital controls. So that's what seems to have stabilized the system for now. The withdrawals have slowed, and as the governor of Bloomberg pointed out today, the structural deficit of the financial system vis-a-vis the central bank, basically how much they have to borrow from the central bank in order to meet cash demand from population, has fallen and is not as dramatic as it was in the first days. So people are limited from the ability to withdraw foreign exchange. They're limited from converting into foreign exchange. That's because of the shortages of physical dollars, and also because of the fact that the central bank lost part of their reserves in the severe sanctions move for freezing their assets. So for now, it seems the system is stable, but it's still very uncertain.
Elena, if If we were to see the energy complex being frozen, if we were to see Europe being cut off from the gas supply coming out of Russia, can you just walk me through the implications of that on the financial system within Russia? Clearly, this is a huge foreign currency reserve that is effectively being monetized. Talk to me a little bit about, were that to stop, what impact that would have.
Well, we need to talk about oil and gas together. And so oil and gas right now, and the sharp contraction in the economy means that Russia could have 250 billion current account surplus. It's historically an extremely significant number. So just to put it in perspective, about 300 billion of reserves were frozen by sanctions. So they would be able to replenish that just in a bit over a year. And oil plays a very important role there. Gas is also important, but it's secondary. So gas is something that will be very painful for a lot of European countries, but somewhat less painful for Russia. So I think when we're talking about sort of trade embargo measures, I think they're very important and have to be on the table, especially given the war that's happening at the moment and lack of ceasefire. But we shouldn't just focus on one item. I think we have to look across the board at some sort of further trade embargo measures.